Welcome back to Home Tips by KEMT Properties. In today's conversation we will be talking about how to qualify for an FHA mortgage. Hi, my name is Arthur, and I would like to be your real estate agent. I dedicate this video to my wife Nanette, and children, Christopher, Ariel, Christian, Aaron, Gabriel, and Eli. My grandchildren Trenton, Ty, and one on the way. Cross your fingers for a boy or a girl. Well, we have a lot to cover in a short amount of time, so buckle up and hold on. 5, 4, 3, 2, 1. If you want to buy a home, but you don't have 20% to put down, or perfect credit, no worries. FHA mortgages are the easiest type of loan to qualify for. But what are FHA mortgages, and who qualifies for them? In this video we're going to teach you everything you need to know about FHA home loans. What is an FHA loan? FHA stands for the Federal Housing Administration. This is a government agency. The FHA was created in 1934 by HUD, the U.S. Department of Housing and Urban Development, to increase home ownership in America. The low credit score and down payment requirements allow more homebuyers to qualify for home loans. FHA loans only require a 3.5% down payment. This is with a 580 credit score. They are insured by the borrowers are required to pay mortgage insurance monthly, usually around 0.85% of the loan amount annually. If a borrower defaults on an FHA mortgage, it is foreclosed on, and HUD will pay the balance to the lender and take possession of the property. The property is then listed as a HUD home on the HUDhomestore.com website. FHA credit score requirements. To qualify, the borrower must have at least a 500 credit score. This is for 90% LTV or 10% down payment. However, it is not likely you will be approved as a subprime borrower with a score below 580. If a borrower has a 580 credit score, they will be required to have just a 3.5% down payment. If your credit score is below 580, it is highly recommended that you improve your credit score before applying. Many people in America have heard of an FHA mortgage and believe it's just for low-income or are bad credit home loans. However, this is not the case at all. These government loans are the most popular type of home loan product used in the U.S. Approximately 40% of all home loans in the U.S. are FHA. They are very popular for first-time home buyers because of their flexible qualifying guidelines and low down payments. These loans are good for low to median income first-time home buyers as well. FHA allows lenders more flexibility on debt-to-income ratios than traditional mortgages. Many low-income borrowers are able to get approved for a home loan through the FHA. Since many first-time buyers have poor credit, FHA loans make a lot of sense. A 500 credit score is needed for FHA with 10% down. If you have a credit score of at least 580, you can qualify for FHA with just 3.5% down. Of course, having a poor credit history means you will have a higher interest rate and your monthly payments will be higher as well. For borrowers with scores in the 500 to 579 range, you should work on improving your credit scores before applying for a mortgage. There are tips to increasing your score later on. Or you can skip to one of our videos on how to improve your credit scores in 30 days. FHA loans are great for anyone that's looking to purchase a home. This is because the requirements and guidelines for FHA is much more lenient than traditional mortgages, making them easier to qualify for. Candidates for FHA loans are borrowers with a low credit rating, anyone that cannot afford a large down payment, if you are receiving your down payment as a gift, if your debt-to-income ratio is high, first-time homebuyers. One of the greatest benefits of an FHA loan is the low 3.5% down payment, which is much lower than other mortgage programs. Typically, conventional mortgages require no less than a 5% down payment, and can be as high as 20%. As an example, if you're buying a $200,000 house, a private loan will require no less than 5% down, or $10,000, which is a best-case scenario. If you get an FHA loan, your down payment will be 3.5%, which is $7,000 for a home costing $200,000. Another great benefit for FHA borrowers is that the down payment can be gifted to you. The down payment of 3.5% can be a gift, as long as the person gifting the down payment meets FHA guidelines. The relative, charity, your employer or workers' union, even a friend can gift you the funds for your down payment, as long as the friend has invested interest in the borrower. This is a way that a FHA loan can provide the borrower 100% financing with no down payment out of pocket. You will need to fill out a gift letter for the mortgage down payment. Like any home loan, FHA mortgages will have closing costs. These fees include origination fees, home appraisals, title insurance, and more. Typically, FHA closing costs amount to 2 to 5% of the purchase price, depending on the lender you use. You should always compare loan offers from multiple FHA lenders to make sure you're getting the most competitive rates and lowest fees. The loan limits were recently increased for 2018 from $275,665 to $294,515 for low-cost areas. This is the maximum loan limits for FHA loans in 60% of the U.S. The limits go up to $679,650 as high-cost areas, such as Los Angeles and San Francisco. FHA loans require private mortgage insurance, referred to as MIP, Mortgage Insurance Premium, or PMI, Private Mortgage Insurance. There are two types of mortgage insurance you will pay: an annual MIP, and an upfront mortgage insurance premium of 1.75% of the loan amount, which is often rolled into the loan. The annual mortgage insurance premiums can be canceled if you acquired your loan after December 31, 2000, and before July 3, 2013, and have the LTV balance of 78% or less, and you meet the requirements in Mortgagee Letter 2000-46. 2017 FHA loan requirements: 500 to 579 FICO score requirement with a 10% down payment. 580 plus FICO score requirement for borrowers with at least a 3.5% down payment. An appraisal must be done by an FHA approved appraiser. Mortgage insurance, MIP, is required. Steady employment and be able to prove income with recent tax returns, W-2s, and paycheck stubs. 2 years of employment at the same company. Non-occupying co-borrowers allowed. At least 18 years of age. Must occupy the home as primary residence. There are many differences in FHA vs conventional loans. For one, FHA requires a low down payment of just 3.5% with a 580 credit score. You can get approved for an FHA mortgage loan with a 500 to 579 credit score with 10% down. However, it is very difficult to process a loan application with a credit score in this range. If you have at least a 580 credit score, it is easier to qualify for an FHA mortgage. FHA advantages: 580 FICO score requirement. The FHA mortgage rate is lower compared to a conventional mortgage. 3.5% down payment. Down payment can be a gift from a friend or family member. Higher allowed debt-to-income ratios. Easier to qualify for. Can reduce your monthly payments with an FHA refinance. They are assumable. No prepayment penalty. Sellers can pay up to 6% of the closing costs. Non-occupying co-borrowers and co-signers allowed. Wide variety of FHA lenders to choose from. FHA disadvantages: lower loan limits. Homes that need renovations do not qualify. Mortgage insurance is required regardless of down payment. PMI costs are higher. Upfront PMI is required. More required paperwork. FHA property standards: single-family home and 2 to 4 unit properties. Certain manufactured and mobile homes through the HUD Manufactured Housing Program. FHA approved condos and townhomes. 30-year, 15-year fixed rate or adjustable rate mortgage loans. An FHA loan can take various forms. It may be a fixed rate mortgage, or a 15-year fixed rate, or 30-year fixed rate adjustable rate mortgages are also available. Debt to income ratios. Your debt to income ratio, or DTI ratio. is the amount of your monthly debt obligations compared to your monthly income. If you make $2,000 a month and you have a car payment, credit card payment, and a mortgage payment that is $800 combined, you have a DTI ratio of 40%. The maximum DTI ratio on an FHA loan can be as high as 50% in certain cases. However, in most cases you will need a DTI of 41% or lower. 36% is considered a good DTI ratio. FHA 203K loans. If you would like to purchase a home with an FHA loan and get additional money to make repairs or renovations, now you can with the FHA 203K loan program. This renovation loan will allow you to purchase a property and get up to $35,000 additional cash to make renovations or repairs. Because 203K rehab loans provide more cash than the purchase price, it is viewed as a riskier type of loan for lenders. Because of this, the minimum credit score is 640. However, all other loan requirements are very similar to a standard FHA loan. You should speak to a 203K lender to get more details. Click here for more 203K loan details from HUD. FHA Energy Efficient Mortgage Program, EVM. The FHA Energy Efficient Mortgage Program has been available in all 50 states since 1995. The Department of Housing and Urban Development created the program because they understood that increased efficiency leads to lower utilities bills. By enabling a borrower to have more income available, they are able to use the extra money towards a mortgage payment. The EM program lends a borrower money to buy a home and includes additional funds to be used to make the home more energy efficient. The borrower just needs to qualify for the loan amount, not the additional funds. First-time homebuyer down payment assistance. FHA insured mortgages allow you to use homebuyer programs. If you are a first-time home buyer, you may qualify for down payment assistance or government grants. You can search for your available state government programs on the HUD website. Good Neighbor Next Door program. The program helps public school teachers, EMTs, law enforcement officers, and firefighters purchase HUD homes at a reduced price. If you qualify, you can purchase a home on the HUDhomestore.com website for 50% off list price. Read more, http://www.thelendersnetwork.com. Follow us at _lenders_net on Twitter, The Lenders Network on Facebook. $1 program. Local governments can purchase HUD homes that have been on the market for more than 180 days and priced below $25,000 for just $1. These homes can be offered to low-income families. FHA Streamline Refinance. If you have an FHA loan, you may be eligible to refinance your mortgage under the FHA Streamline program. If it's been at least 210 days since you closed on your mortgage and rates have improved, you can apply for an FHA Streamline Refinance to quickly get a lower rate and lower monthly payments with a Streamline Refinance program. The great thing about these refinances is that they do not require a credit check or income verification. This allows everyone to be able to refinance their FHA loan to get a lower interest rate and lower monthly mortgage payment. FHA approved lenders. FHA loans are offered by private mortgage companies that are approved by the FHA. Most mortgage companies are FHA approved lenders, and you should not have a hard time finding one. If you have a poor credit rating, then you should find a subprime FHA lender to work with. Who can qualify for an FHA loan? FHA loans are very popular because they are one of the easiest types of home loans to qualify for. If you have a credit score of 500 to 579, you may qualify with 10% down. If you have at least a 580 credit score, the required down payment is 3.5%. How long does it take to close on a house with an FHA loan? The average time it takes to close is 48 days. However, the amount of time it takes to close depends on several factors. You can speed up the process by getting all of your documents to your loan officer as quickly as possible and responding to any requests in a timely manner. Are FHA loans only for first-time home buyers? No. Anyone can qualify for an FHA mortgage regardless if they're a first-time buyer or not. You cannot get a second FHA loan at the same time unless you met certain conditions. In conclusion, FHA loans offer a wealth of benefits for many home buyers. They are easier to qualify for, offer lower interest rates and lower loan fees. They are available for many people who would not otherwise qualify for a home loan due to poor credit or in some cases, no credit history at all. Conventional vs FHA loan comparison. Conventionals require a higher credit score, versus an FHA which require a lower credit score as low as 580. Conventional requires a minimum down payment of 5%, versus an FHA down payment of 3.5%. Conventional's interest rates are higher versus an FHA's interest rate which is lower. Conventional's refinancing will require a credit check, versus an FHA's streamline refinancing, which is no home reappraisal, no credit check nor income verification. Conventional do not require the owner to occupy the home, versus FHA does require the home to be occupied. Conventional does not have any down payment assistance available, versus FHA does have several down payment assistance, for example, SETPIDCA and TOSI. Conventional does not require mortgage insurance if the down payment is 20% or more, or once the loan is paid down to 78% LTV, versus FHA which has an upfront PMI payment and monthly payments for the life of the loan. Conventional loans are not assumable, versus an FHA loans which are. Conventional loans allow a portion of the down payment to be a gift, versus FHA loans allow 100% of the down payment to be a gift.